Worldwide markets this week, tariffs and strategic crypto reserves. We're getting results coming through galore on the JSE. Brent is falling, local GDP and inflation, offshore and CITES tax. This is Worldwide Markets, episode 621 for 5 March, recorded late Tuesday afternoon. My name is Simon Brown. This podcast, Worldwide Markets, is powered by Standard Bank Global Markets and Shift. We appreciate them for their sponsorship. Shift, where you can get go-to travel, shopping payments, investments in the palm of your hand, all at the cheapest Forex rates. We really do appreciate their support here. So the big news, which broke late on Monday, was that President Trump is coming back with his tariff plans. Remember a month ago, it was going to be 25% each on Canada and Mexico. That's now apparently coming into effect on Tuesday, the 4th of March. We will see. And then another 10% on China. The China's not unexpected. I've said many times before, he put them in his first term. Biden continued and increased them. Trump is putting more pressure there yet still. The other tariffs, Canada and Mexico, because of fentanyl coming across the border and illegal immigrants. I don't know about illegal immigrants from Canada. Fentanyl, I think, was 42 pounds confiscated last year. A month ago when he proposed it, he frankly folded like a cheap pack of cards and said, we've got concessions. Most of the concessions were nothing fancy. They weren't anything new. What he got from Trudeau and Canada was essentially a plan that had been signed by Biden back in November or December. He got some stuff from the president of Mexico, but again, she didn't give him much new or much significant or measurable. Now he's back. And I suspect that he might be in a bit of a corner, because how's he going to get out of it this time? What's the plan this time around to say, well, hey, things are terrible, but hey, I got this deal and we can roll back the tariffs. To be clear, tariffs will dent global GDP, including US GDP. That in of itself is bad news. It's also going to push inflation higher. It probably pushes unemployment higher. We're hearing some talk from the Trump admin that their administration, there will be some short-term pain and then everything will be fine. I'm not so sure about that. Everything will be fine. It will be fine. I mean, sure. But in the immediate and in the next, months, weeks, years ahead, it's going to be tough. Stock market is not liking it. Nasdaq's off about 10%, S&P a little bit less. We're seeing some of the big tech stocks take quite a pounding. How do we play it as investors? Well, I tell you, I've moved my 36,000 into my tax-free account. New tax year, that limit resets. And at this point in time, I'm sitting on that 36,000 and thinking to myself, not sure. I might look at, we don't have an all-world country index, which has got a lot more EM. The global one from 10x Investments does have, and that's typically usually my standard response. I'm also thinking about Europe. The meltdown we saw in the Oval Office on Friday with Vance, Trump, and Zelensky. Basically, it is saying to Europe, you are on your own. And does Europe not also at some point get some tariffs at 25% on Europe? Trump has certainly floated that at points. But from a military perspective, it's saying, Europe, you're on your own. UK PM has said that they will support Ukraine with boots on the ground and planes in the air. Europe has been... It's kind of like being, if you look at the Europe-US relationship, Europe's like being the younger brother who's happy without the accolades and the awards and stuff, bumbling along, doing perfectly well, but not excelling in a sense. I heard a great quote, is that America is where you go to make money, and then you go to Europe to spend the money that you've made. But this is going to shake up, particularly in terms of defense. We've seen a lot of defense spending promises coming from European nations, France, UK, Germany, maybe not, but saying, hey, hang on a second, we've actually got to spend more. So we're seeing defense companies the world over, not just European defense companies. Suddenly they are saying, we need to get serious about this and we need to spend on defense. As I said, I haven't yet, I've put the 36,000 in. I haven't yet bought anything with it. I am having a bit of a wait and see. Is Trump going to fold again this time? Is the market going to shake off? Time will tell, but at this point in time, what is that Chinese curse? May you live in interesting times. We live in interesting times, and I got to say, I'm not sure it's quite as much fun as we thought it would be. We've got a power hour coming up on 31 March. The plan on our power hours was to do them the third Thursday of every month. But venue availability at the Standard Bank head office in Rosebank is not always great. They gave us some rooms that I thought were not ideal. So we are shifting so that we always get an ideal room. Hence, this is on a Monday. We are looking at offshore investing, effective offshore investing, US CITES tax. What is it? How do we manage it? What about buying those Irish ETFs, which are exactly the same but have a much better tax treatment? Other ways to invest offshore, look at the offshore ETF environment. All of that, 31 March, 5:30, webcast or live in person, justonelap.com/events for more information and booking. So let's get to some market stuff. We've got oil on a tear downwards, and trading in the low, 71.62. It's been in this zone a couple of times since March of 23, so almost over the last 2 years. If we zoom this out before, 70 was another important number. It does mean that we are better off in terms of petrol and diesel. We're getting a nice drop on diesel for March. We're getting a very modest petrol cut. That's the rand. I'm going to touch on that more. The 70 is an important number. But if we're also going to see things slowing down, global economy slowing down, there's a number of think tanks now saying that they expect the US to go into recession, negative GDP, some as much as saying a 2.5% negative GDP on the back of those tariffs. Demand for oil disappears. Can OPEC Plus cut production enough to prop up oil? Understand Russia is pushing as much as they can. They need the revenue from it. What we're also seeing is many other OPEC nations are saying, well, the price is down. How do we offset a lower price? We produce more. So I'm not sure. Certainly the 70 to 80, even the occasional blip up to 90. But this is an important point for oil at this point in time. And what we are seeing, I mentioned the rand, which last week I said 1830 was the big fight. Well, that quickly melted. We've seen the dollar index under some pressure. That frankly surprises me a bit, because surely if we're entering periods of uncertainty, the fact that the US might be causing the uncertainty is neither here nor there. If we're moving into periods of uncertainty, what we typically see is money flowing into the dollar. If we look at the USD ZAR, we do see it weakened quite markedly. It's improved a bit, but it's still 1856 as we're doing this. It was down at 53 earlier, so it's been as high as 71 cents, 1871 last week. That bun fight at 1830 got absolutely won at this point in time. Do we get back to it, or do we push back up to sort of the 1920 odd, where we've seen a number of points in time? I am still thinking that we can see some strength coming through in the rand, but I'm watching that dollar index incredibly closely to see how that absolutely plays out. It's messy. It's just very, very messy. But while we're on messy, we've been having a whole bunch of results coming through, and the results have been locally. Nedbank was good. Santam was great, but Santam is expensive. PPC, really good update. Truers, just bad numbers from Truers. Just bad numbers. Discovery, I thought was really good. Shoprite, I thought was perfectly fine. The market wasn't so thrilled by it, but I thought the results were perfectly fine. I like their growth strategy. I'm interviewing Peter Ennerbrecht. It'll be Wednesday morning on my show. I want to ask him about some of those, the pets, the outdoors, the unique, those sort of things. They only did about 700 million in a business that did almost 130 billion revenue for the period. That is absolutely nothing. But what is the scale? What are the timelines that we are seeing in that regard? Metrofile, just bad results. I used to own Metrofile. I used to say, you know what? We got an economy, and the economy needs itself to have some document storage, and Metrofile's in that space. Their digital's doing great, but they're getting box destruction. They're getting new boxes, but net they're flat. That is lack of GDP. And talking about a lack of GDP, we got some GDP numbers out for South Africa for last quarter last year. We also got the full year GDP. Where are we? There it is. So Q3, remember Q3 was a horror number. That got upgraded a bit. That looked a little bit better. But the short answer is our GDP is bleak. Our GDP number for the year, where is it? Let me quickly scroll down. For 2024, 0.6%. Well below population growth, really looking bleak as heck. Interestingly, the budget, which got postponed, they were anticipating 0.8% for the year. So, yeah, just horror. Inflation was as expected, 3.2%. That's edging higher, but still right at the bottom. I tell you what caught me by surprise was vehicle sales. And we got those vehicle sales coming out on Monday. This is the February vehicle sales. Let's look at a longer time period. You can see, broadly, we've been going sideways. But I got to say, February at just under 48,000 was surprisingly impressive. Absolutely. I mean, it's so. What do we got? We got a little bit, a little bit better than the October number. November was down. This is, I think, where the two-pot money is going. Surely. I mean, are we otherwise just buying cars because we're just feeling cool? Surely this is two-pot money coming through here. That makes any sense. I mean, our vehicle sales, aside from the November blip, are basically, I mean, not even back. They are back there at March of 2023. Really? Yeah, I mean, we'll see. Interestingly, second biggest seller of vehicles was Suzuki, and that is CMH, a stock I hold. I got to say, so remember the Jimny? Well, remember, it's still there. The Jimny 3-door. You wanted to buy one new, you would wait months, certainly weeks, probably months. You could buy them secondhand, low mileage, 5,000 Ks. It was costing you more than a cost of a showroom because immediate delivery. That is no longer the case. You can walk into a Suzuki right now and buy the 5-door and drive off with it. And you're seeing 5-doors on for sale, low mileage, but priced in some cases as much as 50 or 60,000 down. Now, they've got a lot more than just the Jimny, so that's just anecdotal and not necessarily huge. But it is telling that Suzuki was number 2. They've got a number of really, really well-priced cars. We have been, as I said, seeing results. So the one set of results, which, was so Nvidia. I hold Nvidia. It has been, I'm late to the Nvidia party, so I don't have nearly as much as Nvidia as many others. My returns are not as great. That sell-off there was DeepSeek, and then it recovered, and then results last week beat expectations, top line, bottom line, every other line. But the question is, and someone said to me, it was a brilliant observation, the expectation for Nvidia is to beat expectations. So on the day after results, big pump, then big drop, then a pump, and then on Monday again we saw a sell-off. We saw a sell-off. Everything was getting sold off. There was nothing special about Nvidia. This level around the 115 is moderately important. It does look like we're going to go back to the mid-90s, maybe around about 100. The challenge with Nvidia is that can it be a 10-bagger from here? And the answer is that means it needs to become a $30 trillion stock. I don't see it. I mean, AI is great. I've said before, I think the value in AI is less going to be accretive to the likes of Microsoft and Meta and the like. I think it's going to be more accretive generally to services, to us as users. Same with the internet. Same with computers. The early computer manufacturers, Dell and those folks, IBM. Do they still make computers? Yeah. Are they the Nvidia of the world? No, we all use them. Absolutely. Everyone has. I mean, I've got a computer, an iPad, a cell phone, 3 of essentially computing devices on my desk right now. They all come from Apple, coincidentally. But I think the value in artificial intelligence is ultimately going to accrue to society and operations and businesses and medical, and less so to Alphabet and Google and Alphabet, Microsoft, Meta, etc. And hence the likes of ASML, hence the likes of TSMC, who produce the chips and who produce the equipment that makes the chips. So I think we can see a bit more weakness here. If we look at the snapshot, so what we've got is a median, in fact, let's drill this a little bit shorter, a 3-year median PE. It's around 85. If I go to 5 years, it's 85. If I go to 10 years, the median is 61. The forward is 24. That says to you it's cheap, but what's happening is ultimately it is growing into its evaluation. And that's the challenge with it. The earnings keep on growing, but the share price is not following. And if we have a quick look at where is my free cash flow one, free cash flow per share, and let's zoom in a little bit. Looky. So it's not unusual, big quarter, small quarter, et cetera. But largely, the price has kind of lagged behind it. We're at that lag again point where the price has come down relative to free cash flow. So what am I doing with my Nvidias? Nothing. I hold some direct in New York via Shift. I also hold some via the F&B ETN on the JSE. They both give me Rand exposure, the ETN directly into the price. At this point, I'm not panicking. I'm not doing anything exciting with it, but I don't see Nvidia being another 10-bagger. And Jim Cramer, and I know it's easy to hate on Jim Cramer, but what Jim Cramer is pointing out, he says, the problem with Nvidia is the shareholders have weak conviction. And what he means by that is they're there for the pump higher. And as soon as the pump higher is not happening, they're out. They're not there because they think it's a stellar company and because they think the Blackwell and Grace Hopper 200 chips, etc., are absolutely game changers. Not at all. Nor their automotive business, which is, I think, $500 million, and they reckon it's going to be a $10 billion business within a couple of quarters. And that does mean weak hands, which means it can sell off quite aggressively, and certainly we have been seeing that, well, left, right, and center in the media. I want to quickly touch on President Trump's crypto reserve. It's a scam. So it includes Bitcoin, Ethereum, Solana, XRP, and Cardano. Look, I hold Bitcoin. I have for a while. I'm happy with it. But here's the thing. What is a strategic reserve? A strategic reserve is something that a government would hold that they either have a liability in or that they need to perhaps buy, they need in a hurry and can't get in international markets. So oil. Perfect strategic reserve. We have one in South Africa. We also have one in the US and many other countries. You will see that central bankers hold currency and gold and US Treasury bills because suddenly things go wrong and you need to be able to pay for your imports. And well, you've got that money. What is strategic and a reserve about crypto? Absolutely nothing. And you know what? There was initially some enthusiasm. This got announced on Sunday. There was a whole lot of, in the immediate, prices responded as you would perhaps expect. So there is Bitcoin weekly chart. There was the initial giant sell-off, which was just sort of, I think everyone just getting tired and saying, what the heck's happening here and where's our strategic reserve? And then suddenly we got it, and we can see that candle. This is a Monday, Tuesday candle. It rallied up to 95,000 and is now back at 82. This, more than anything, is about Trump repaying the crypto bros who supported his election campaign. We can debate how dodge that is or isn't, but to be clear, I mean, is the US going to go and buy significant amounts of crypto? Sure. I mean, they absolutely can. They're going to have to get the Fed to go brrr and print money because, to be clear, they don't have excess money. They run a budget deficit. They've got, 36 trillion of debt, and that would push crypto higher. Absolutely it would, with the Fed coming in and buying, or the US government. But as soon as they stop buying, does it just not go back again? There is one point, and this is the same in the ETFs that we saw that came last year. There were folks out there who knew about Bitcoin and said, yeah, but I can't buy Bitcoin because I don't want to go open an account at some random exchange and say, but now there's an ETF. I can buy it in my Robinhood or my Charles Schwab or my Shift account. That brings more people into the net. This crypto reserve brings a lot of people into the net who suddenly like, wow, this must then be important. But also careful what you wish for. So gold was a strategic reserve once, and 1933, Franklin D. Roosevelt basically took people's gold in America. They paid you for it, but they said, give us your gold. It was mostly gold certificates. Give us the gold. We'll pay you whatever the price was. I think it was $23 an ounce or something. So on the flip side, careful what you wish for as well. But I want to quickly touch also on meme coins. And I've talked around meme coins before. And to be clear, so Fartcoin peaked on 19 Jan, which was, a couple of days after we saw the Trump official coin. It is down 91% since then. The Trump official, which launched on, was it 17 or 18 Jan, had a high of 77.34, is now 12.27 as I talk. These are not crypto. In fact, the SEC has said, you know what, these are not securities, they are not nothing. They're like trading cards. When you were a kid, you buy, actually, I'm now suddenly remembered, you'd buy a packet of stickers at the local cafe, and then you would trade the ones you had duplicates of, and then you would stick them into your book. And they were birds. I mean, was I that weird as a... Look, I lived in Waterfall, which is 20 minutes out of Hillcrest, which is 20 minutes out of Durban. There wasn't a lot happening there. But baseball cards and all of those sort of things, that is what these essentially are. There is limits, but those limits are running into hundreds, if not hundreds of millions and billions of coins, not the 21 million from Bitcoin. So if you're going to trade these meme coins, sure, but you've got to get in a hurry and then get out, because the rug pull is coming. It is absolutely coming. And after there is a rug pull, there is no second bounce in these coins. Bitcoin is down 91%. The Trump coin is down about some 80%. There are a lot of people underwater. Every time this thing bounces, there's a seller, and there's just lack of interest. Folks saw it run, and they were like, exciting. Now it's collapsed, and they're like, So meme coins, stay the heck away unless you want to get directly into one of them. And then sure, catch it early, run it hard, have some fun, and then expect things to get quite ugly, probably fairly quickly is my expectation. Worldwide markets powered by Standard Bank Global Markets and Shift, the global money app, your go-to for travel, shopping, payments, and investments in the palm of your hand, all at the cheapest Forex rates. I really appreciate their sponsorship. I know it's easy to say, but it really is a case of we've been running this show for ages. We've had sponsors here and there. They've come in for 10 months. That is really like a huge thanks to Standard Bank Global Markets and to Shift. But let's leave it there. We'll be back again next week. My name is Simon. Look after yourself, and if you can, look after somebody else as well. Cheers all.